Hello, this is Joe Pryor of the virtualrealestateteam.com in Oklahoma City. It's early January 2014, and I have another bit of information for investors. And this is kind of dovetailing over the one I previously did, talking about market resets where there are market fluctuations. There's been recent articles in Forbes, in a real estate publication that's very respected called Investor Inman News, and what it's talking about is the lowering of return on investment in bubble markets. And specifically, they mention markets like Orlando and Atlanta and Las Vegas and Phoenix, which I previously talked about. And what they're saying is there's been about a 1% overall drop in return on investment, like for instance on capitalization rate, with the expectations that that is going to go down further. And again, a lot of this has to do with way too much investment purchases. And I'm very grateful to investors, especially the corporate investors that went in and bought a lot of distressed property early on, paid cash, and they allowed the markets to recover and probably saved the bacon of a lot of owner occupants that were also underwater, even though they might not have done subprime and 20% down. But the fact remains that there are very few markets, especially these primary markets, that are increasing in value. And so my question to any investor in the United States that is looking at various markets is, you buy low and sell high. You buy when you can get a decent return on investment, but what you don't do is buy on a down market. Do not buy when the swing on return on investment is going lower. Now, Oklahoma City is one of those markets that's going higher. Also, Forbes mentioned markets like Houston, for instance. Houston is right now an outstanding market. And so there are those markets that are increasing in rents, markets increasing in value, where if you buy even today, that your return on investment is very steady and maybe even still appreciating in 2014. This is going to be made in strategic buys in the right areas, not necessarily what it used to be, where what you were doing is buying short sales and foreclosure properties, and where there were so many of them out there that you could get a decent buy. That market, to a great extent, does not exist anywhere anymore. And so what we have to do is make very, very prudent decisions. So my suggestion to any investor in the United States, look to the secondary markets. Look to Oklahoma City, look to Houston, look to Omaha, look to Kansas City. Don't look at markets that have already oversaturated and markets that are on the way down. And I think that what you're going to find is long-term, if it's not an idea to get rich quick, if you're a long-term hold, then markets like Oklahoma City, rising markets, are going to make the most sense to you. This is Joe Pryor of the virtualrealestateteam.com in Oklahoma City, where we deliver traditional real estate values at the speed of technology.